Yes, I think into the second half of this year, I think copper was always the second half trade for us. Particularly when you're looking at China, I think what is interesting is that we have a very lopsided demand growth picture. So sectors that are doing already well right now are sectors that are linked to the energy transition. So grid spending, for instance, is relatively strong. Investment in renewables. EV sales are relatively strong as well, both copper intensive. The drag has been really the housing market. And if the government now comes out and actually reduces that drag from the housing market or even gives a little bit support, that's where you get potentially a more balanced demand growth pictures where you don't have two sectors, EVs and grid, that are very strong, and another sector that is very weak. And I think if that comes together, you could potentially have more support to the copper price into the fourth quarter. Yes.
Michael, the cyclical side is one thing. The other is the structural side. And we were just talking earlier in the show about Bidenomics. We've seen a $1 trillion infrastructure spending program, $53 billion for semiconductors, of course, which uses copper. As you look at the metal space, what's the impact from fiscal policies like Bidenomics at this stage?
It's potentially huge. And you see that, again, coming back to China, you see that already in China. The housing market last year made a negative 10 percentage point contribution to copper demand in China. But that was completely offset by a positive 15 percentage point contribution from spending on renewables and the EV side. So in China, we're already seeing the real impact of the energy transition. Now, the US and Europe haven't really come to the party yet. The US plans are potentially quite impactful as well. The US has 10% share in copper demand, so it didn't really matter for the market. When you're looking over the next few years, so 2024, 2025, there is scope, I think, for the US and Europe actually to make a bigger contribution to demand growth as well on the energy transition spend.
Michael, I mean, weak economies are pretty much here to stay for the most part, especially this year, one would think, because of the higher interest rates that we're seeing. Of course, growth levels set to weaken quite substantially, which this is where I wonder the notion around that demand perhaps being a little bit more balanced. Is perhaps copper trying to price itself for a recession?
Yes, I think this is the manufacturing recession that we are seeing at the moment is certainly an issue, I think. And if it wasn't for some of the green spending that we do see come through, copper would be way, way, way lower. So I think copper, when you're looking at the kind of the ranges that we've been trading, it has been a relatively wide range, but it has actually been relatively resilient. The drag for manufacturing, the manufacturing recession that we see, particularly in some of the developed countries, that is a little bit of a concern. It's what saves us is the energy transition at the moment.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.